Hi, and welcome back to the Food Fund, where we analyze investing in food, beverage, and restaurant stocks. In this video, we will be evaluating the portfolio performance for April 2025. I made a big change to the portfolio strategy, so be sure to watch through the end of the video to find out. Before we get started, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get started. Cue the logo. Let's start off with the market's performance. For the month of April, the S&P 500 fell about 0.8%. No new all-time highs though. The market has been very painful year to date. Okay, let's move on to the portfolio performance. I deposited $100 into the account on April 1st, 2025, and at the end of the month, the portfolio balance was $1,001.75. This means the portfolio gained $8.39 for the month, representing a 0.8% gain for April. Though we did gain less than the 3.9% return we had last month, we still outperformed the S&P 500. Given the S&P 500's negative 0.8% return, we gained 1.6 percentage points of alpha by not being invested in the S&P 500. For the past 3 months, we have outperformed the S&P 500, showing that food stocks can, at times, outperform a collection of high-flying tech stocks. When we look closer at the chart, we see that we actually have started to beat the S&P 500 since inception. February was the beginning of the inflection point, and March was where we caught up the most. However, I realized I am lacking one critical factor to compare performance. My calculation of S&P 500 returns only includes share price appreciation and not dividends, which are factored into the portfolio's performance. This means that I am underestimating the S&P 500 returns, and thus my outperformance must come with an asterisk. In the meantime, I will work on a way to factor dividends into my calculation of S&P 500 returns. Since inception, the portfolio has had a negative 0.4% return on a money-weighted basis, while the return on a time-weighted basis was 0.2%. Given the S&P 500 3.9% return, we lost 4.3% of alpha by not being invested in the S&P 500 since inception. Again, here we are only calculating the share price appreciation and not dividends for the S&P 500. Now let's look at the portfolio moves for the month. First, received a tasty dividend from Texas Roadhouse on April 1st. Bought some Chipotle, Kurasushi, and Texas Roadhouse on April 3rd. Bought more Chipotle on April 4th, and then I started to buy the Pepsi dip. I bought Pepsi on April 7th, 23rd, 24th, and 25th. On April 30th, I also received a little interest from the cash I held in the account during the month. Let's look closer at some key holdings. Celsius is still my largest holding, with 6.59 shares at a cost basis of $32.08. This position is up around 9%. Celsius makes up 23% of the portfolio. I have managed to reduce the weighting of this position while still maintaining a profit by focusing on building other positions. The fundamentals still look great, although I expect debt to be a short-term issue following the acquisition of Alani Nu. Next, Pepsi remains my second largest holding, with 1.31 shares at a cost basis of $152.12. This position is down about 10.9%. Pepsi makes up 17.7% of the portfolio. I have managed to reduce my cost basis by about $7 by averaging down. However, I am concerned about the high concentration in this position and plan to add very sparingly to the stock. Wingstop, Chipotle, Texas Roadhouse, and Hershey all remain negative at this point. I still would like to build my Chipotle and Texas Roadhouse positions, but am waiting for a good buying opportunity. Kurasushi has been a nice position for the portfolio. It is my 7th largest holding, with 0.95 shares at a cost basis of $52.22. This position is up about 12.8%. Kurasushi has grown to 5.6% of the portfolio. I am very happy with Kurasushi. In these times of increasing economic difficulty, I find that Kurasushi offers tremendous value to restaurant customers. Every day, the company is moving closer to free cash flow positivity. Now we have my coffee positions. Dutch Bros and Starbucks are both still in the black, with Dutch Bros being my best performing position, up 100.9%. I would love to add to both of these positions, but they are still outside of my buy range, so I must remain patient. Continuing the trend from last month, I deployed less cash and have $82.81 remaining. This 8.3% cash position is larger than the 6.4% cash position I held at the end of last month. There's a bit of a change in portfolio management from prior months. I do intend to continue investing, but want to start collecting a bit of dry powder to deploy more strategically when the time comes. As far as the weighted average metrics for the portfolio, cash conversion cycle, and net debt to EBITDA are better this month. Gross margin and return on invested capital are unchanged, while revenue per share growth, free cash flow per share growth, and yield on cost was worse this month. Looking forward, May has Celsius reporting earnings on the 6th, and Sweetgreen will report on the 8th. I am eager to learn more about the integration of Alani Nu at Celsius and how automation is improving the bottom line at Sweetgreen. Well, that is it for this month. Many thanks for watching. What do you think about the portfolio? Share your thoughts below. It is always great to hear from you. Please check out some more videos right now, and don't forget to put your money where your mouth is.